So Kritika, there is no echo in my voice. Everything is loud and clear.
Yes, sir. ठीक आ रही है वॉइस आपकी.
Okay, all right. So good evening, everyone. Welcome to our space. So finally, I thought I'll be doing this space at all-time high, but literally I took this decision at 15,700, and after that, literally Nifty rallied some 2,500 points, and Nifty went up to some 18,100. So literally, you can call it as an all-time high. But I wanted to see on Nifty 18,400, 500, but that didn't happen. But absolutely fine, because this is broadly, the range we gave last year from 16,000 to 400, give and take 1-2% to 18,500-600. So, finally, actually after 1 year, let me tell you, Nifty is completely sideways. And for last 1 year, the Nifty return, as we speak, right, the Nifty return is around -3% in last 1 year. So this is absolutely a sideways market. So please avoid headline grabbers in your life. Those who keep making bullish and bearish call on the market, and ignoring all the data points and ignoring all the historical evidences we saw in 2010 to and between 2010 to 2013, right? So I kept telling you this fact that we are in the phase of from 2010 to 2013, right? And maybe we are closer to let's say 2013, where in last leg our currency depreciated big time in 2013. So exactly playing as per my script, and I'm hopeful that I'll be able to call the bottom in whatever the fall we are gonna see in next 5-10 days. So hope whatever the advice I have given you, you guys have immensely benefited from that. And I'm done with my recap work, right? So recently, around 18,000, I gave the exit call to all my followers, and right now the Nifty is around 700-800 points down. But some of the stocks are down big time. They are down by 15-20% without any notice to given to anyone, and they may go down more from here on. So who knows, right? Maybe we may see my 16,900, 800 in coming weeks, or coming maybe in October first week. So be prepared for that. And this market is completely sideways. And how to trade the sideways market? Always buy in installment and sell in installments. Don't take big bets, right? Without any hedging. So always hedge your bets. And important part is, do your trade in installments, or do your investments in installments. So to cut the long story short, I'll give this 15-minute speech on the basis of my FTDB model. So first, why I see that you have to be a little defensive, and you have to work in a staggered manner, and the reasons are following for that. So why I'm still thinking this market may remain sideways going forward for next couple of months, at least for at least 2 months, because it's clearly that our markets are fairly valued given the global context. Global markets are very cheap as compared to the Indian stock market. So our valuations are still richly valued. And after the inclusion of Adani Enterprises, which I tweeted some few weeks ago, like that, after the inclusion of Adani Enterprises, Nifty PE may go little higher. So you have to be watchful here. Your valuations are not cheap. I'm not saying you are expensive, but you are not cheap given your macro headwinds. And when I say macro headwinds, your bond yields are going up. Recently, your bond yields went up some 30 basis points in last 8 to 10 days. And second thing is, your INR is, your currency is hitting all-time low, right? Though your currency is relatively stronger, but I repeat, even if your currency is going to 83, 84, you will not bottom out soon. So you have to watch out for currency. You have to watch out for your bond yields. Your 10-year bond yields are slowly, going upwards, and you have to be watchful here. And RBI may follow the Fed going forward, because index is right now trading at 112.3 something, right? And this will cause inflation all over the globe. And if the inflation is going to go up in India, RBI has to follow, and RBI has to raise the rates going forward. So the rate hike will come in next policy as well, right? And in next week. So you have to be watchful here also on the bank nifty side. And apart from that, the way US bond yields are behaving, the global liquidity will be a big issue going forward, and a lot of the PE funding will PE funding startups and PE funding companies will face definitely a liquidity issue, and they may fire a lot of employees, and because of that you may see some kind of a issue with your consumption story as well, because if a lot of people are getting unemployed in India, your consumption story will be also, your domestic economy will be also impacted. So be watchful there, right? And and what you are hearing with Wipro and all those people, they are not going to hike salary for next couple of years, to be honest. The kind of slowdown they are facing in USA, right? So all those the story around the IT people making a lot of money, they end up making nothing in terms of 3-4 year CAGR basis, right? So if you compare in 2005-6, the TCS employee was getting, let's say, 2.1, 2.2 as a entry level package. Right now he is getting 3.75 or 3.5. So the CAGR will be around 5-6%. So his salary hike is is lesser than the inflation in India. So to be honest, this consumption story will be in trouble going forward. So you have to watchful on that front as well. And I feel personally one of the biggest trigger for this sideways market, will be populist measure by the government going forward, because in 2024 Mr. Modi has to face the election, and he has to give it to some poor people, because our rural economy is suffering a lot. So I think the government will be not caring too much about the stock market, and because of that your returns will be mediocre. When I say the returns will be mediocre, your returns for the Nifty will be for the next year. This is my projection. I may go wrong. If the global macros go terribly wrong, then our return will be 0 or maybe 5%. If the global macros are more or less stable, or staying where right now they are, you'll be end up making 12 to 14% kind of a return on Nifty, when we speak next year on Diwali. So in 2023, when we speak on Diwali, you'll be having the Nifty levels of around 19,500 to 19,800, or roughly 20,000 thereabouts. So 15% kind of a return I'm assuming for the year. But the major part of the return may come after March 2023. So till March 2023, you may struggle to cross your all-time high, and then the last 1,500 or 1,800 points real move on the Nifty will come after the March. So you have to keep this in mind, because you cannot engineer a bull market with this kind of a global macros. Keep this in your mind. I'm telling this from last 4-5 months, and people are not listening to me. So this is the one thing you have to keep in mind. So this is mainly on the fundamental side. So macro is done. Now let me talk about the technicals. So if part is done, the fundamental oblique macro is done. Your markets are not cheap, and all the global macros and your domestic macros are also deteriorating. Your currency is hitting all-time high. So these are the key challenges you have to face, and hence I am advocating for. Hence I am hoping for a sideways market, and for a sideways market you have to deploy just buy in panic strategy. Nothing else. You don't need to chase the breakouts. the rule number one to trade and survive in sideways market, for whatever the period I'm trading this market for, only rule for the surviving the sideways market is only buy fear and panic, nothing else. So this is the one rule I want to give it to you. And on the technical fronts, fundamental is done. Technical fronts, Nifty is below EMA 10, EMA 21. It means that your short-term trend is clear. And the moment Nifty breaks EMA 63, you can clearly say your medium-term trend is also down. So the moment you break below 17,200, FNO traders should have zero position in stock market. Practically, I asked you yesterday itself to keep a zero position in the stock market, right? So FNO traders are absolutely safe. They basically, when I say FNO traders, future traders, because if the person is doing delta neutral, he will if his hourly system is in sell, or 4 hourly system is in sell, he will short Nifty and he will short put, and he will make the delta neutral strategy like that. But for option traders, you may have some positions, but for a future traders, you should not have any position in the stock market. And this is my system. For account below, I think 2 crores, we don't have any FNO positions. For a bigger accounts with maybe 50 crores, 30 crores, 20 crores, we have some future positions where we have shorted Nifty against that. So that position is absolutely fine, and we have a long short strategy. So our net long in future segments is almost close to zero. Almost close to zero, or either in futures we are net short. But what I have done today, I have bought some stocks in cash market and deployed some capital in small cap space. So to cut the long story short, chances are you may break EMA 200 this time around, and you may break EMA 63 as well. And your RSI is also not giving you the comfort. India VIX is rising, which is to be honest, it has given a breakout. And the moment India VIX give a breakout, your average true range, basically the ATR of 14 days or ATR of 21 days, go in expansion mode. This is I'm telling you with a lot of back testing data. So if ATR is in expansion mode, normally traders have to exercise the caution, right? They have to protect their capital. Basically, I'm talking here for FNO traders, not for the cash segments player. So and trust me, the moment Nifty breaks below EMA 63, you'll have a very bad advanced decline ratio. You'll have very bad market sentiment. So be little careful here. So what I'm telling you, this is absolutely no time to trade in stock market if you are a only long side future trader. Cash is still, you can do it, you can afford it, right? But if you are only plain future long side buyer, please wait till Nifty close above 17,580. Please miss that 2% or 1% move, but you'll be protected. You'll be able to sleep, right, properly, right? So till the time Nifty is below 17,580, don't go massively long in future segments. So this is the one advice I want to give it to the plain futures buyers. For long short people, you do whatever you want, because you are a pro, you can manage your position. And one important thing is, we got a very bad weekly close. Absolutely bad closing on the weekly basis. Kritika, I hope my voice is reaching to you.
यस सर, मेरे को एकदम क्लियर आ रही है, पर कमेंट्स आ रहे हैं कईयों के कि वॉइस इज नॉट ऑडिबल.
ओके, मे बी. सो क्या कर सकते हैं? आई थिंक आपको लॉग आउट करके लॉग इन करना पड़ेगा, मतलब फिर से ज्वाइन करना पड़ेगा जिनको प्रॉब्लम आ रही है, राइट? सो बाकी लोगों को आ रही है, आई थिंक, होपफुली. सो यहाँ पे ये थोड़ा सा प्रॉब्लम आपको हो गया है कि अभी सॉरी, हाँ, सो वो फ्लो में. सो यू गॉट अ वेरी बैड वीकली क्लोज, एंड अगर आप देख एंड इफ यू गो बाय द कंबाइंड ओपन इंटरेस्ट एंड द काइंड ऑफ शॉर्टिंग FIs are doing in FNO market, you may have a very bad time going forward. Basically for the FNO stocks, right? For small cap stocks, you may face you may get some traction on the upside because they are down some 20% from the recent all-time high. So they have already corrected. Now that Nifty 200 basket may correct further. So this is the one thing I want to tell you, that if you are investing in small caps, chances are you will not lose much, but still you can lose 5-7%. So what is your risk here? Let me define the risk here. If you are investing at 17,300, you can easily lose 5 to 8% of your portfolio value. And this is the minimum drawdown you can expect from the stock market. So 5 to 8% kind of a risk you can have. And what is your upside potential? Let me curb your enthusiasm. Your upside potential is not more than 15 to 18%. So the risk reward for investing here is 1:2. Your risk is 8%, your reward is 16% in a small cap investing. If you are a large cap investor, your risk is around 6-7% and your reward is around 12%. So this is what I see as of now going forward. So market is not really attractive right now, but it is not terribly expensive. So but the way global macros are positioned, it's better to buy in panic rather than buying at current market price. This is my advice, right? So I think I'm more or less done with the view. For investor, I want to give one screener, right? So for investors, because right now we are, as per the risk management system, the moment EMA 21 is taken out, you should have almost zero position in the future segment, naked future position, right? So let me give one screener for investors. So you try to find companies where the return on capital employed is greater than 15%, and their EPS growth, annual EPS growth is roughly around 12%, which is equivalent to India's nominal GDP, or 13%. The interest coverage ratio has to be greater than 3 times, right? Because right now the interest rate is going up. So you want the companies with the lesser debt. And then you want the companies where promoter plus FIs plus DI stake put together greater than 85%. So the strong hand holding has to be greater than 85%. And lastly, the stock has to respect EMA 63 on weekly charts, right? So this is the one screener you can run on a screener.in, and you can put this scanner in a charting.com, and you can get stock for investing. Right now, with this kind of a macro, if you are a long side player, because a lot of people are listening here, is basically just buy and hold kind of a people. This is the one screener you run. The stock which are supporting EMA 63 on weekly time frame, you can consider that stock for investing. And with all the parameters like the growth rate higher than India's nominal GDP, return on capital employed greater than 15%, ISCR, interest coverage ratio greater than 3 times. So and PEG ratio less than 3 times. If you are getting the companies with these kind of criteria, you can slowly, in staggered manner, buy in 3-4 installments. So and right now I have nothing, I cannot say right now that I know everything, to be honest, right? I am also, these kind of macros are, I haven't seen in my career, to be honest, right? Dollar index at 113, right? It's at 2021 year high, right? So my career is not that long. So I don't know how the dollar index can affect the global economies, right? So go slow. This is my wish, that this market may give you multiple opportunity in next 2-3 months. When I say multiple opportunity, this is the one dip you are getting right now. You may get another dip maybe in December, right? Or January 2023. So this is the one dip. Let's say this dip will end at 16,700 or 600 or 800. And after that, you may go to 18,000 or 18,200, and people will think it's breaking out. And then again, it may drop down to 16,000 in January 2023. So this is what I'm hoping this will be the range going forward, or 16,200. And this is my wish, right? Because this is my wish, because I want market to remain sideways, because the most of my income is from the market. If the market is sideways, I'm gonna make huge amount of money, right? If the market is good, I'm gonna make decent money, not huge but decent, right? But when the market is going one-sided down, it will be almost impossible to buy all the dip, because I'll left with almost no money, right? So I want some time in my side so I can accumulate more and more shares. And you should also pay that. Please understand. Let's say you have put it 20 lakh rupees in stock market and you are losing, let's say 1 lakh rupees. You are losing 5%. But please assume your net worth is roughly, let's say, 5 crores. So you have put just only 4% of your entire net worth in stock market. So you wish that the market remain sideways for some longer period of time, so that you can put more money into the stock market and you end up making a lot of money, right? So you have to take that 20 lakh to 1 crore or 2 crores. And then that 2 crores will become 4 crores and it will impact your net worth. So you wish that the market remains sideways, and you are and if the market is sideways, you'll be able to accumulate more units, more shares or more mutual funds units at a lesser cost. And whenever the bull market comes, let's say in 2024 or 2023 second half, you'll end up creating a lot of wealth for yourself and your family. So that's it. No major panic, but no major positivity. So again, the view is not changing. The market will remain sideways going forward, and you have to plan like that, right? You have to plan like that. You cannot, live in false optimism that everything will be fine, right? So go slow, go in a staggered manner, and try to put more capital when there is a lot of panic, lot of distress, lot of fear, right, on the street. That's it. And whatever will happen, right, don't worry, you'll have my support. You'll keep getting my feedbacks, and I will help you. Don't worry about it, right? I will take care of most of you. Don't need to worry. And I will navigate through this, right? And I will give you the clear vision once this dollar index tops out. I'm hoping that dollar index will tops out in maybe in next 3-4 days. The US bond yields will tops out in 3-4 days. But this is, right? They are just trying to form a climax top. But who knows? In this climax top, they may go to 115, 116. So just go slow for next 2-3 days. Buy what you can afford. Buy what you can afford for 12 to 24 months. And trust me, after 12 months, given all the challenges, I'm hoping the US inflation will be also come down going forward, and hopefully we'll have a better time after January 2023. And if I'm getting any sense that the market is bottoming out before January 2023, I will definitely help you. I will definitely indicate you. So my view is floating. My view will change with the data, but I'm absolutely 90% convinced this is still a sideways market with lots of volatility. When I say sideways market, the market is moving in a 15-17% range from last 12 to 13 months, right? For the Nifty, monthly range is only 5-6%, right? So this is absolutely a sideways market with lots of volatility, where the last year return for the Nifty is -3%, a small cap return negative, mid cap return flat, bank Nifty 2-3% here and there, or I think maybe with the today's fall it is minus. So almost all the indices are flat. So no need to go, super bullish on market, and no need to go super bearish on the market. Buy, focus on individual companies, and individual companies will make you better return than Nifty, and where the companies which are growing higher than India's nominal GDP. So that's it from my side. I promise I will deliver everything in 30 minutes, and I have one meeting at 10 p.m. so I have to rush for that. I have one Zoom meeting, so I have to prepare for that. So and whatever the Q&A I am not taking today, I'll be taking going forward next week in our Telegram space, right? Telegram channel, and I will answer all your queries. So all the best to all of you. Take care. Bye bye. Kritika,